Hello guys, this is just Big FX. So I want to show you guys how I got this tool and this buy trade. Before I continue, please, I'm using my mobile device. I'm actually not my studio to use my system to make it. So I will try to make it as visible as possible so that you guys will understand it. In that says, let's go back to that. So now this is what I normally trade. This is my trading plan and pattern I normally trade. When I see movements like this in the market, level and then a trend actually pull back, break of pressure to the outside, then pull back and mitigate this other block I wasn't mitigating. Then I target the high. Now looking at this combination, it is quite simple. What you should be looking at is that when you see a buy movement, a sort upwards, and there is an other block and FVG that have not been mitigated, the market moves up, comes down and mitigate the FVG and take out the previous high. You should identify that movement as an unusual. But if the market comes down and mitigate the other block and take out the previous high, that means the market is gonna go. Now, one thing you should understand is that if there is no pullback here and pullback here, market will eventually try to, and there is an AVG here, market will eventually try to create its own liquidity if there is no liquidity in the market. So basically what the market did here was it printed this like pullback to mitigate the FVG, take out the previous high, now come down here, mitigate the other block that have not been mitigated to take out this high. So this is what we'll be looking at in the market. Now the first thing you need to do if you open your chart is mark out your range. You understand? So if you mark out it, let me use this place as an example. I mark out this place down to this place. This is a range. Get now how a range works. Range basically you can use your gang bus to mark out a range. Now range consists of two important parts: the premium level and the discount level. Now the upper layer is the premium level, the lower layer is the discount level. Now if you look at this closely, once the market came down to this place, it mitigated another block down here, mitigate another block here. It's buy up back into this breaker block here. Now this is a discount premium level, so it indicated here, came down here, tap here, tap into this FVG here, and take out this high. So in other words, this right here is an inducement. Get now it took up, mitigated this breaker other block here, came down, tap into this breaker block here. It didn't take out this high. Remember what I told you, the market needs to create an inducement for itself if it wants to move in a particular direction. If there is no liquidity, market creates its own liquidity. So what that is basically called engineered liquidity. So market engineered this liquidity. How the engineered liquidity is being from what you can see and the fact that that's an engineered liquidity is that if there is a move to the upside and the market retraces, it didn't mitigate the other block, then it pull back and then take out the previous side. That is an engineered liquidity, and come down and mitigate the other block, started buying. The scenario behind before they push to the upside to take out the previous high is called engineered liquidity. So that is basically what the market did here and printed all this buy up here. Get so that being said, let us go to the main part of what we are doing, discussing. So this area was there was a breakup structure here at the upper 4 hours time frame. So how to mark out your range is very simple. Look at the low of the leg that caused the breakup structure, either to the upside or the downside. You mark it and look for the high that caused the high of the leg. So that will be where your downward is. Now, you already know your premium levels and the discount levels. You know that you sell from the premium level and buy from the discount level. You understand? So being that said, you need to understand the logic behind the market movement. Now, when you look closely, this order block is filled, and this leg is the break of structure to the upside down up here. You call it take out this area to the up here. Now the market pulled and back when you get this other block here, started creating internal movements. You understand? Now if you look closely to this internal movement, you will see that there are break of structure to the upside, and market was printing, leaving some LVG order block behind while it was going. Now this movement, some people will say, this market I will leave behind, but for us that trade this pattern, we don't rush into the market. We take our time, observe the market movement before we jump into the market movement. You understand? Now if you got this buy here, you can actually hold it with it up here. But if you didn't get this buy here and you just came in as I am and see the market movement, what you just basically need to do is to look for this formation pattern here. Now there was a breakout structure here. This was the leg that created this breakout structure. After this, there was a fight here. It created another block here and the FVG here, which this market, after taking up this side, it came down, created the FVG, pushed up, take out this side. Now the market came back. This is the second leg that came back, mitigated this other block here, or mitigated the same trend line of FVG, tap into the same trend line of FVG, printed another higher high here. So now this FVG that I've been tapped in is closer to my other block here. So now I term this as valid. Why I choose this other block ahead of this one is simple. This liquidity here is closer to my other block other than this. For market to come down to this place, it needs to integrate this FVG here, this imbalance here. Now it will come and tap into here, go up, come down before it will tap into the other block down here. You get? So that is very far for the market to do. So since the market is targeting this high, what it basically needs to do is to take the closest other block close to its liquidity, so that it can push up and take out the high. You understand? So that is what this market I was anticipated, and that was how I was able to catch this market. Now if you look closely, this other block was inside the discount area, and this one here is inside the premium level. So now, yes, since we explained it earlier on that you look to sell from premium and buy from discount, since this other block is inside the discount, I time it as a valid order block that will help me, that I will choose to take out this place. You get? So yes guys, this was how I was able to catch this trade. Furthermore, since this market is reacting at an FVG, this FVG here is reacting as FVG here. Now if you want to know where to buy from, let's leave it this way. Let me not further confuse you guys. So yes guys, this is how to catch this trade. The first thing you need to do, for a recap, is identify your range. Look out for your premium and discount areas. Now look for your trading pattern on strategy. If you see the formulation in the chart, now if it falls into the discount, if let's say for instance as if it's an object and you see your order block inside your discount area that has a liquidity closer to it, it is ideal for you to choose that order block because it is a valid one, and if you do that, I believe you will have a lot of good results. So this is just quick FS. I hope you got value from this. Stay tuned for another one. You're welcome.